Well, good afternoon, everyone. So it's been a while since we've done a Tesla video on this channel, and also coincides with the fact that Tesla has finally announced their split that's been talked about for a couple months now. And I've actually done two videos on this prior, but it was approved basically a few days ago that Tesla will do a 3-for-1 split. And it's going to be a bit unconventional because it seems like what's going to happen, and we'll discuss this, is that shareholders are going to get like a dividend in the form of two extra shares. So before we get into the details, let's just go over Tesla stock briefly. So Tesla has been on a roll the past month or so. Was up $40 per share Friday, which is almost a 5% increase. And in the after hours trading, it's up another $4.31. But this has always been in its history, it's always been a volatile stock. Back in April, it was $1,145 a share. Then when everything really dropped in May, it dropped to 628 a share, which retrospectively looks like it was a great buy at that point because it's rebounded basically $370 almost, or slightly over $370 a share since May 24th. And really, in the past month, it's rolled up $200. It's actually exceeding its 1 year target estimate according to Yahoo Finance right now. But those tend to change as we get into like our next quarterly earnings. The target estimates will change. It kind of adapts with the data. So let's just look at from a quarterly earnings standpoint. The last earnings beat, actually, it's beat the last four quarterly earnings. Next one is October 18th. We don't yet have a projection for that. Keep in mind the dot, the white with the blue line around it, that's the estimate. That doesn't appear to be out yet for October. But anyway, now let's go to one of my favorite sites, Benzinga. I wish they would sponsor me. I've heard that their ads come onto my videos. So this one just kind of goes over ahead of the Tesla share split, $1,000 invested in Amazon Alphabet before their splits, how that would be doing. Because both of these stocks also split this year a couple months ago. In the case of Google or Alphabet, just basically a month ago. So this just kind of looks at how these stocks would have done, assuming $1,000 was invested, like in Amazon, coinciding with the split announcement. You would now have 7.2 shares, and most of you that follow me know I analyze these. Like if these stocks get back to their pre-split price, you'll end up being insanely rich because these stocks to go from like 100 back to 3,000, or in the case of Amazon, like 3,500. That's an insane like 35x. Okay, so let's see. So you would be at 1,033 if you had got in before the split. For Amazon, for Alphabet, you'd be up almost 9%. So now let's look at, I'm going to reference a Barron's article for the actual split. This is coming August 24th, the Tesla 3-for-1 stock split. And let's see here. I like that. Look at that, the 3 charging stations representing 3 shares. So Tesla has given investors something to look forward to, 3-for-1 stock split. So as I said, they're going to get a dividend of 2 extra shares. Shareholders of record as of August 24th. The day after, the next trading day, Tesla stock will start trading at a new price, which will be a third of what it used to be. So this is going to be a great buying opportunity. With that being said, so if we're at 900 right now, of course, now that this has been announced, it's going to run up even further. So if you're going to get in, you better get in quick, because as of the price right now, this would mean Tesla would be $300 a share, which compared to how it's traded in the past several years, this would be an insanely cheap price. And this stock, I really think, just based on buzz alone, like forget fundamentals, but just based on the buzz alone, I think the stock's just going to keep growing and growing. So let's go back to and see it's split. Like in 2019, 2019 was the last time that I really took a hard look at getting into this stock. I think before the split, I think it was at like 290 something at the pre-split price back then. But it's been one, I've never actually gotten into it other than doing one call option on it. I've never actually gotten into it because it's just been such a volatile stock. I followed it going all the way back to 2016 or 17. And I can recall it would go up as high as like $200 or $300 a share, then it would crash back down to 40. So at the time, and of course my risk appetite wasn't what it is now. So I just kind of avoided it. And there's a lot of these that, I, of course, in hindsight, I wish I would have got into, but I didn't. And part of that, you get busy, working full time, you get caught up in the daily rut of life, and you kind of miss out on some of these bigger opportunities, which that's kind of what the rut does to you. And that's what I want to avoid going forward. Hopefully the growth of this channel can help with that. And so, yeah, we had the huge run up 2020 during the pandemic. And then as far as the post split price, which would be around $300, that would take us back to a low, almost a pre-pandemic low, if you just go by the real price, the price in real terms, which, adjusted for the last several splits. It hasn't been below 300 since the start, or before the start of the pandemic. So that's going to be a really good opportunity, I think. And this may be my chance to get in. And except, even though the one option I did on Tesla was really a huge risk that I shouldn't have gone into, and I was lucky to profit from it at all. I think I profited like $200 from it. But I would actually, as many people say they're afraid of getting into an option on Tesla, I would do a leap on Tesla, because I think in 2 years, I think Tesla will be higher than it is today. And that's really the basic calculation, right? With the leap. If the stock is going to be higher, if it's going to keep moving higher, and of course, if the price appreciation of the option exceeds the time decay, you're going to come out fine. So anyway, let's see. Individual investors often chow down on bite size. One study found stocks announcing splits typically beat the market by 16 percentage points over the next 12 months. That's true. This is a little bit outdated, but you get the idea. This is basically just what I said. This says 860 to 285. I said 900 to 300 because the price has moved up. Small investors matter for Tesla. About 46% of shares available for trading are held by non-institutional investors. So that's good. That's going to open the door for more smaller and retail investors. So that's a good thing. I'm a big fan of splits. I think splits are a great thing. And then at the end of this, we'll do my favorite example in the spreadsheet. Let's see how we're doing on time. All right. I'm squeezing in a Sunday video here, but I've got a lot of stuff to do today, so don't want to spend too much time on this, as much as I like doing these. Okay, last time Tesla split its stock 5-for-1 back in August 2020. Shares rose 81%, which was phenomenal. Part of that was the clownish market that we saw. But still, I mean, this happens just about with every split of tech stocks, especially. I'll have to look and see when Meta stock might split. That could be a good one. Okay, so shares rose 81%, trading on new split adjusted basis. It's hard to see that repeating. That's true. But then again, it seems like we're back to a bullish market. So who knows? I would say we never know what the market's going to do. Even Warren Buffett will say he doesn't know what the market's going to do. But right now, I'm bullish. And 2 years out, I think in the long term, the one thing you can bank on in the long term, like if you're looking 3, 5 to 10 years out, the market, more often than not, is going to be higher than it is today, unless we have a lost decade like Japan in the 80s and the 90s. I don't see that happening here. I mean, there's always a chance, but I don't see it. I would bank on the market being higher in the long term than it is today. So let's see. Investors have known about this split for months. That's true, because I've done videos all the way back to March on it. The shares have risen 25% over the past month, 40% since their May 52-week low. But see, the thing is, in May, it's just the market was so crazy. We didn't know where the bottom was, right? Okay, now, next two things I want to do. I want to look at options on this, because I'm thinking my play in this is going to be leap options. I'm not going to buy this stock. Certainly not before the split. I don't really have $1,000 to throw at this right now. Or of course, if I bought this, I'd want to buy at least 3 to 5 shares. And right now, that's not going to happen. So let's see how far out the leaps go on this. Okay, the leaps go all the way out to June 21st. Let's just look at January 2024 instead of June. Because what I like to do, I still kind of do both. I still do the spread strategies. I still do some of the covered calls or poor man's covered calls. So what I like to do in case the stock works against me, I like to leave myself an out so that I have another option to get into because I never know after June 2024. I never know when they're going to add more. That's something I'm still trying to figure out. I've actually asked around. As soon as I have an answer on that, I'll do a video on that. But that's something that I'm trying to find out when will the next option get added because you kind of want to if you need to get out of one and you need to roll to the future, you want to have those future dates available to roll to. So with that being said, oh, and remember another thing with options. So, and this happened with Amazon. Like if you were in one, of course, I did an option play on Amazon thinking that the stock would shoot to the moon in advance of the split. Didn't do it. The thing actually expired worthless. So that was a total loss for me. But for a minute there, I had a great potential. It was like having, instead of one lotto ticket, it was having like 20 lotto tickets, right? Um, and what would have happened because Amazon split 20 for one, right? So I had one option with it, which then became 20 options, and they never ran up. It had about a month after the split to run up, and it just never happened. That part of the reason was that April, May, and June timeframe. Just the market was crap around that time. So let's look at, but keep that in mind with this. If you get into one option on this, it becomes three after the split. So let's see. Let's look at the $1,000. See, you're going to be paying a hefty price for this. Well, actually, here's a nice strategy, right? So if you, instead of getting into the stock, this could be genius if it works out. If it doesn't work out, it's totally stupid. But if it works out, it's genius, right? So what you could do, and I just thought of this while doing this video, just this is like a live thought. So if you were to get into like the $900 strike price, you could get into this option for the price that the stock would be post split, right? So then if you were to take $900, which the stock's trading at today, instead of buying one share for $900, you could buy at 265, you could buy three options for that price. And remember, each option controls 100 shares, right? So that's like control over 300 shares. That's the leverage you get. And then once the split happens, these three contracts then become 9 contracts, right? 3 for 1. So how is that? Then you go from having 3 contracts to 9 contracts. All of a sudden you have control over 900 shares. And this is a leap. So you know what? I just came up with it right here. This is what I'm going to do. I may look a little bit, I may go 1,000, or maybe 1,010 to pay a little bit less. Because then at 205, then you could potentially buy 4 or 5 and then do the math on that. Then that's 15 contracts, leap contracts, not just short term expiring. I think that could be genius. Only if it works though. Okay, so there's that. And I hope you all understood what I just said there. If not, remember, go back and watch again. But let me see if I have a spreadsheet open here. Let's see. Oh, this is something else I was working on. It's actually my final project for my MBA. But let's do this here, okay, real quick, just some on-the-fly analysis here. So if this thing cooperates with me, this MacBook is starting to get rather clunky. I don't know what it's doing. If this thing doesn't unfreeze pretty quick here, I'm gonna just end it. All right, you know what? I'm just gonna do it on my phone. Let me see, hold on. Oops, come on. What the heck? That's not what I want. What the heck, MacBook? Come on. Oh, now it's gonna work. Unbelievable. All right, so forgetting that little pause there. So Tesla, all right, 3 for 1, 3 for 1. So right now we're at $900, and I do this example every stock split video, and I don't want Times New Roman Although it's funny, I got a comment on my handwriting. If any of you ever get to see my handwriting, I get comments on it all the time. The running joke is that I should turn it into my own font, which I've joked about for years. Somebody actually came up with a great name, Tom's New Roman instead of Times New Roman. I thought that was clever. Okay, which font do I want here? Why am I wasting time on this? Come on. All right, there we go. I'm just kind of OCD about this. I like to have certain fonts. All right, so 900, all right? So we're gonna be at 300 after the split. So then keep in mind here, if you get my favorite example, so 10,000 growth of $10,000, right? So if you take this, if you got into 10,000, if you put $10,000 in at $900 a share, then you would have 11 shares, lucky number 11, right? And then these become 33 shares, right? So then if this gets back to where it was, 900, let's see here, 900 times 33, then you 3x your money. But then in the options, in the case of the options, let me see if I can figure this out here because I don't have the fundamentals in front of me. But if you're going to get into those contracts like I showed, if you get in at the $1,000 or at the $1,100, what was it? I think it was 1,010 strike price. And of course, Excel thinks I'm doing a formula, so forget that. All right, so you can get in. Let's see, it was 205. So if you're going to take just 1,000, get 5 contracts at like 200, and then so you got 5 contracts, right? So 5 contracts times, look at that's going to do that again. 5 contracts, 5 times 3. So you're going to have 15 contracts at the post split price. And let me see here. So then what will happen if the option has a delta of like say 50, then it's going to increase 50 times what the stock price. That's probably going to be over a lot of people's head. Let me just come up with something simple. All right, because you control 100 shares at 15 contracts, you have control over, I think this is right here. Here goes Times New Roman again. Fix this. So that's going to control 1,500 shares. Say that this gets back to, let's see, say that 1,500 times, hold on. That's if it got back, if the stock got to like back to its pre-split price. I'm trying to figure out here. Let me just go. I'm going to do another video on this, but real quick, I'm going to go to my Power E-Trade app because it tells me what this would be. Like you can actually analyze options trades. In the next video I do, I'm actually going to analyze this out. There will be a part 2 to this. So I'm going to type in Tesla. I'm going to do this now, but next video I'll do it on the screen. Where is Tesla? Okay, Tesla's right here. So you go to Power E-Trade, you go to the options tab, and then I picked January 2024. Oh, there's already a March 2024. And I picked 1,010. 1,010. Is this right? I thought Yahoo told me something different. Oh, no, it costs 2,440 for one contract. Or no, I'm sorry, I have 10. I have 10 selected. I default to 10. All right. So at 1, that's only going to cost you 244 bucks. So actually, you know what? I would just, for this example, I would go ahead and do 10 instead of buying the stock. I would do 10 leaps in this. So that's going to be 2,440. And then let me see if I can show this here. This is the Power E-Trade screen. I'm going to actually log into this on my computer next time. But this is Tesla. Let's see. Let me see if I can, I'll bring the screen down here a little bit. Okay. So that's Tesla. And then at the bottom here, you can analyze your max profit and loss. So if the stock gets to like, oh, hold on a second here. I have something wrong selected here. Oh, selling. We're buying, not selling. Okay, we're buying. All right, so this chart here, this is the underlying stock price. So then you can move your arrow or your dot here We're at 900 right now, which is the break even because that's what you're buying into. If the stock moves all the way to 1,054, which for some reason that's like the limitation that it has here. So if the stock moves, and heck, this video is going to be really long, but I'm kind of on a roll here. So watch this. If the stock moves, if you can see that profit and loss there, um, watch this. So this is break even here, profit and loss. Watch that number go up. Watch that. If the stock moves all the way, and this is 10 contracts, keep in mind. So look at that. You can have an insane profit. That's $53,000 profit if the stock just moves from 900 to 1,050. And obviously, after the split, if you end up with 30 contracts instead of 10, remember 3 times the one, or 3 for 1, right? Um, it can just be really profound. So like, I mean, 53,000 on 10, or 5,300 on one. That's really incredible. Anyway, I'm going to end it there. I've rambled on long enough. Hopefully that was valuable. Hopefully you all understood everything there. If not, just watch it again because remember, watching my videos over and over again is a great idea. Not just for you, but it helps me too. Anyway, thanks so much. Have a great rest of your day. Take care.